I have to say that your report, which shortly came after Elon Musk himself said, look, I think my shares are a little overvalued, sent the stock tumbling down about 10%. Did you expect that kind of response?
Well, I'd be very careful with crediting one report, a one-pager, in fact, for that kind of reaction. It was a rough day for the markets. I think if you remember, a lot of tech stocks were down. But I think people were just pointing at something. So no, of course, we did not expect that.
Right, and although they did cite your report quite frequently in various reports, including ours, as a reason. Now, behind your call, though, I mean, you're still bullish. You still think Tesla is a very good company. But what exactly was behind your call, Adam?
Right, Betty, what we're basically saying is, first, we still are believers in the story. We think Tesla is, in fact, the most important car company in the world. I think if you ask key suppliers, you'll hear that sentiment echoed. We think it's worth $320. It's the only auto stock we recommend in North America. We're underweight rated on both GM and Ford. The message is there's probably some room for a bit more balance in the debate right now. A bit more balance, and so we do share Elon's view. Mainly, if we highlight quickly, we think that EVs categorically have been failing outside of Tesla. There are a lot of reasons behind that. We don't want to depend on breakthroughs for batteries to democratize EVs. Second, we think that the ramp in China should be handled very slowly and carefully. We think Tesla is trying to build brand authenticity in the world's largest car market, and that might take more time than investors are prepared for. And then finally, and I'll quote my 4-year-old son Carlos at dinner about a month or so ago, said, "Daddy, when the computers drive all the cars, why are people going to buy a Tesla?" I'm thinking, go to your room, son, time out. But in all seriousness, it changes. There's so much going on with mobility and applying Moore's law to cars driving themselves. It does change why people drive any car, and we think Tesla and Elon Musk are very well positioned, but it raises some questions.
Okay, but all due respect to your 4-year-old, I'm trying to figure out that logic, though, Adam, because even if they're driving, driverless, if there's driverless cars, they're still driving cars, and why wouldn't they be driving clean energy cars?
Well, I think if you ask people why they spent $100 and whatever, $10,000 or $20,000 in a Tesla, it's probably not because it's clean. It's because it's just a riot to drive. The driving pleasure, the acceleration, the performance, the handling of what you feel as a driver and the stimulation you get is incredible. And you take that away, and this is not just a Tesla issue. The ultimate driving machine is BMW's logo, too. What happens in the future? So all auto companies are confronting this complete revolution and reinvention of what we call shared autonomy. And I guess the answer to Carlos's question is Tesla has to make the best autonomous car. It's a different model than what they're doing today.
All right, Adam, great to have you with us. Thank you so much for explaining your report with us. Adam Jonas, the Morgan Stanley Managing Director, who wrote that report on Tesla. And we're just a few moments away from the opening bell. We've got the top 10 trades you don't want to miss right after this break. Keep it here on In the Loop.